Hi there, welcome to Kneppy Invest. Time for requests, and I was asked to look at Sims Metal Management. And even though I wasn't asked directly about their financial year 22 results, I thought I'd take a look at how this company is performing. And I think this is probably one of the best examples of a value trap on the ASX right now in terms of when you look at the PE ratio of Sims Metal Management, you might think this is the cheapest company in history of mankind because the PE ratio is something ridiculously low. That's because this company had a really good financial year in 2022, and more than likely that sort of performance won't extend further from here. We might see 1 year in the next 10 equate to what this company did experience in the last financial year because a lot of tailwinds behind this company. So for those who don't know, Sims Metal Management is primarily a recycling company. So let's get into it. And I think the first thing we're going to do is look at whether this is a high quality company. Now, there are a few clues when you are trying to decide whether this is a high or low quality company. And this is a very important question, in my opinion. And in saying it's a very important question, in my opinion, that's in relation to my investing style. I want to know if this is a high quality company or a low quality company. If it's a high quality company, then it all comes down to value. And if it all comes down to value, right now, there is extreme value for Sims Metal Management. So I don't think this is a high quality company. It is a low quality company. And it does seem like recycling companies have low margins. And this is also a cyclical type of company. And you'll be able to see that when we look at the revenue over the past, I think I provided 15 years of revenue data. So when it comes to this company, it's all about the share price trend and the sentiment. Now, right now, there is negative sentiment in this company. You'll see that when we look at the charts, particularly the daily chart, and that's probably the last slide in this video. So because this is a low quality company, I'm more interested in whether the share price is moving up or down, and I'm less interested in the valuation metrics. I'm still going to show you the valuation metrics in this particular video, just so we can see some of the things to look out for when we're talking about value traps and that sort of thing. Now, for full disclosure purposes, I am not a shareholder of this company. However, I have been a shareholder of this company in before when, well, taking advantage of the tailwinds. So I think I was a shareholder of this company for maybe about 6 months when the share price was moving up. And then as soon as I saw my opportunity to sell out and take profits, I did that. And that's what I do with low quality companies. They are not the sort of companies you want to own for the long term because the share price go up and down in cycles. And you'll be able to see that with Sims Metal Management. In fact, the all-time share price for this company was way back in 2006 or 2007. So those who bought in this company in 2006 or 2007 and haven't sold out are still in the red. That is not the sign of a high quality company. And here is the monthly chart for Sims Metal Management going all the way back to 1992. So a 20-year chart, no, 30-year chart. I can't believe 1992 was 30 years ago. Anyway, so 30-year chart right here. And in the middle of this particular chart was a share price high for this company, which was like 2008. So the start or towards the middle of 2008, share price of Sims Metal Management got up to about $43. Now, I don't know if the shares of this company have gone through any sort of consolidation or that sort of thing. So we'll just say the share price, according to this chart from TradingView, was a high of $43 in 2008, and the share price hasn't got higher than that. In fact, the share price is significantly lower than the high. So the share price right now is around about $12 or so dollars. So you're significantly in the red if you bought into the company during that hype period. And you can see the share price rising significantly from about 2002 to 2008. In fact, the share price rose from $4 to over $40. This was a 10-bagger for anyone who's holding during that period. And this is one of the reasons you don't fall in love with any stocks, because even though this was a company that gave you significant returns, you had to have sold out to realize those returns. And then, of course, looks like GFC harmed this company, and it really hasn't recovered since then. Now let's have a look at the financial year 22 results for Sims Metal. They just call them Sims Metal instead of Sims Metal Management, or maybe just Sims. Anyway, the current share price. Now, I did prepare this video at the end of trading on the 4th of November. I haven't looked at what's happening on the exchange today. However, I did sell out of one company today, but I might leave that for another video. However, the share price currently for Sims Metal is $12.17 at the end of trading on 4th of November, which means the market cap for this company was 2.3 billion. Revenue in financial year 22, 9.3 billion. I think that could have been near a record high. Profit, 599 million. So let's just compare the profit to the market cap. So that means the PE ratio, if you compare the two, is about 4. In fact, it's less than 4. So if you thought this was a high quality company and you thought revenue was going to continue to climb and profit was going to continue to climb, and those are two important characteristics of high quality companies, then a P ratio of 4 is absolutely absurd. So that is sort of the first clue that this is not a high quality company, and the market's just not interested in this company right now, because if the market was interested and they thought a P ratio of 4 was good value for this company, you'd see a lot of buying and the share price wouldn't be in a downtrend. Operating cash flow, 424 million. Free cash flow, 150 million. So with operating cash flow, take away any leases, and with free cash flow, you take away capital expenditure. So this company is capital intensive, spending about $274 million on capital expenditure. Another pretty good clue that this is not a high quality company is when you look at the revenue over the past 15 years. So that this is the chart of the revenue. I've also provided gross margins. So I just want to see how gross margins are moving. Are they going up or down? I do use gross margins in terms of whether or determining whether a company has any sort of a competitive advantage or moat. So if a company has competitive advantage or a moat, say a brand, or they're developing a brand, you more than likely will see gross margins increase. And the reason behind that is people are more willing to pay higher prices if there is a brand attached to it. Just think of Apple. It would be absolutely absurd paying something like $1,500 for a phone only 10, 15 years ago, but people do that all the time now. And one of the reasons they do it is because of the Apple brand. There's a lot of similar situations in the world right now. And I think one of the companies say that is developing a brand, a worldwide brand, is Breville. But this video is not about Breville. This is about Sims. And more than likely, Sims has absolutely no brand. And for those who didn't know what this company does, more than likely have no idea or have never heard of this company in the past. But just looking at the revenue over the past 15 years, you can see really it's gone nowhere. And there has been times when revenue has been dropping over, say, a 5 to 7 year period. And it did that between 2012 and 2016. Revenue actually dropped from $9 billion, to $4.7 billion. But over the last few years, we have seen revenue rise again. And in financial year 22, this was the best year this company has experienced over the past 15 years. But that doesn't mean there's any trend in revenue developing here, even though it's at the highest point, just because a 3-year trend does not equate to a trend in revenue. So that's the main thing here when you're looking at the chart. Now, the company apparently is doing a share buyback right now, so shares are actually going down. But when you do calculate the revenue per share growth, so I always look at revenue per share growth instead of just revenue growth, because I want to take into account if companies do any sort of capital raising or maybe even a share buyback, because in capital raisings and share buybacks, the amount of shares on issue either go up or go down. So I want to look at revenue per share. So what, if I was a shareholder, what is my revenue per share, going up or down? And for Sims, over the past 10 years, it's actually gone down, negative 1.1%. But in the last 5 years, up 7.2%. And the revenue growth is actually accelerating, because in the last 3 years, revenue has climbed 12.3%. But I think the market is a little bit skeptical that the company can maintain revenue that they saw in financial year 22, and also the profits that they experienced in financial year 22. And that's why the P ratio right now is 4. Another problem Sims Metal has is just the volatility in profit. And this is the 15-year profit history of this company. And financial year 22 was by far the best year over the past 15 years. But this company doesn't always experience profits. In fact, over the last 15 years, Sims has experienced 6 years where they were loss making and another 9 years, where actually 10 years, where they were profitable. So even though this company was profitable by almost 600 million, doesn't mean it'll continue to be profitable in financial year 23 or in financial year 24 or 25. And that's one of the reasons why, again, why there is a very low P ratio for this company. And that's why the market is a little bit skeptical moving forward for Sims Metal. Now to looking at the cash flow statement for Sims Metal, and this is something I do for every single financial statement or full year release or half year release. I go straight to the cash flow statement, work my way back, look into balance sheet, profit and loss, and then I'll actually look at any relevant notes. And probably the most relevant note here might be note 18, which is a reconciliation of profit to operating cash flow. But the main thing here is receipts, and we already know that revenue did climb significantly from last year to this year, and that is shown in the receipts as well, increasing from 5.6 billion to 9.1 billion. Now, really low margins for this type of company, which doesn't surprise me, but moving forward, you'd think companies that are in recycling would be able to get better margins just because they're in recycling. And governments around the world would want to entice recycling a little bit more than they're probably doing now. And the best way to entice recycling is to make the margins and the profits of those companies who are in recycling a little bit better than they are right now. So you've gone from receipts of $9.1 billion to operating cash flow of 548 million. So straight away, really low margins. And that's why if this company does experience significant pullback in the receipts or revenue, and if those margins don't increase, in fact decrease, this company again could go back to being loss-making in the next financial year, maybe even financial year 24. So the next thing I like to look at here is capital expenditure, which is payments for property, plant and equipment, $275 million in financial year 22, but it doesn't seem like it's usually that high, just based off or comparing to a capital expenditure in financial year 21, which was only 129 million. They did explain the capital expenditure in their presentation. I don't think I'm going to look at that explanation in this particular video, but the other thing to note here is they are doing a share buyback. So payments for ordinary shares bought back, 124 million, dividends paid, 140 million, repayment of lease liabilities, 78 million. So altogether, this company in investing and financing activities burned through 275 million plus 260 million, which was more than the operating cash flow. There was, or is it less? No, it's a little bit less. No, it's more. 265. No, it's more. $13.3 million more. So they've increased their cash by 13.3 million, but there is exchange rates as well, so 0.8. So cash on hand actually increased from 240 to 252 million. Sorry about that, I just can't do mathematics. 275 million plus 260 million is 535 million, which is less than 548. So mathematics on the fly, well, sometimes can be hard. One thing I like to do is just to see where the majority or where the revenue is derived for a company. And this is found in one of the notes in their financial statements. And they've just broken down the revenue in each of their different reportable segments. And they have about 6 or maybe even 7 reportable segments here, broken down by geography. So we have North America, ANZ and UK. So North America, the definition of that is comprising subsidiaries and joint ventures in the United States of America and Canada, hence North America, which perform ferrous and non-ferrous secondary recycling functions. So fairly similar definition for ANZ and UK. The global trading, which is another one of their segments, comprises the group's ferrous and non-ferrous marketing subsidiaries that coordinate sales of ferrous bulk cargo shipments, non-ferrous sales into primarily China and Southeast Asia, and brokerage sales on behalf of third and related parties. Another one of the divisions or segments is SAR, comprising the group's share of results from its investment in the SA Recycling Joint Venture, and SLS comprises subsidiaries which provide IT asset and cloud infrastructure reuse, redeployment, and recycling in quite a few countries, including Australia, Germany, Ireland, Netherlands, Poland, UK, and the United States of America. So this company is global. They have operations all around the world. And by far, the most of their, I wouldn't say most, but the majority of their revenue in terms of different segments is generated in North America, $4.5 billion there, $1.7 billion in Australia and New Zealand, $1.6 billion in UK, $1.1 billion in global trading segment, $327 million in SLS. Now, the other thing I'd like to look at here is just the margins in each of these segments, and fairly similar margins for all of them, apart from SLS. So SLS had $327 million of revenue, but only $5.6 million of EBIT, and the majority of other, if not all other segments were profitable. Now, the only one that wasn't profitable was called unallocated, and they just call unallocated, comprising unallocated corporate costs, interest in a joint venture in Australia, Sims Municipal Recycling, and Global Sustainability Insurance Corporation, a captive insurance company. So these are sort of information I do look for in every financial statement. I want to see where a company derives its revenue from. Are they heavily weighted to one segment or one geography, that sort of thing. Something else Sims did was break down their revenue in the different types of recycling. For instance, $6.9 billion of their revenue was in regards to ferrous secondary recycling. So we're talking about iron and steel. $1.9 billion was non-ferrous secondary recycling, $327 million recycling services, $115 million in secondary processing and other services. And the reason I like this particular slide is because they compare it to financial year 21. In the previous one, you actually had to go to another page and try to compare financial year 21 to financial year 22. And both ferrous and non-ferrous recycling grew significantly from last year to this year. So that's the reason why this company did experience significant growth in terms of revenue. They've also broken down the sales to external customers. And it is interesting if we exclude other, so that's probably many other countries, which was 3.8 billion. The top country that they sell to external customers was Turkey with 1.85 billion, and just behind Turkey was the United States with 1.77 billion, then Bangladesh with 685 million, Australia with 612, and then China with 507. So very interesting that Turkey is their best customer when we're talking about sales to external customers. Now onto valuation metrics, and this is a quite important step if I considered Sims Metal Management to be a high quality company. And if I did consider this company to be high quality, PE ratio of 3.8, I'm selling my house, going all in on Sims Metal, because you don't see many PE ratios with 3.8. And if you do see a PE ratio with 3.8, more than likely it is a value trap. And particularly when the share price is in a downtrend, that is another sign that this is a value trap. But just having a PE ratio of 3.8 is simply ridiculous. The market doesn't believe that the financial year 22 numbers will continue in the future. And I think the market has a point. Price to sales ratio 0.24, price to operating cash flow 5.4. Again, that is really low. So the numbers I'm looking for in terms of price to operating cash flow are between 10 and 6. And if I see any company, even a low quality company, with a price to operating cash flow between 6 and 10, I think there might be some value there. This is 5.4. It's even lower than that 6 lower bound range in that little range I usually have to look at the value of a company. Also did a reverse DCF. So what's the growth in this company have to be to justify the current valuation? And we get a negative 12.1%. So again, the market is expecting that the profit of this company and the operating cash flow of this company and the revenue of this company will fall over the next few years. Now, because I consider Sims Metal Management to be a lower quality company, the valuation metrics are of very little interest to me. So PE ratio of 4 does not excite me. But what might excite me or make me nervous about this company is the share price movement. Is it in an uptrend or downtrend? So this is the daily chart for Sims Metal going back to October 2021. So this is about a 1-year chart. And we can see the share price actually in an uptrend from October last year all the way through to about April into May of this year. Share price reached a high of about $22.50. But then the share price started to go down. The market became wary that the success this company was going to achieve in financial year 22 was going to continue. And the share price has almost halved since those highs. And the share price is in a downtrend right now and almost a 1 year low. So if we go back 1 year ago, or just over 1 year ago in October, the share price did see at one point the share price on one day, the share price did get down to just above $12. And right now the share price of Sims is just above $12. So 1 year low in the share price for Sims. And I have no idea if the share price is going to go lower. I don't really care at this point in time because the share price is in a downtrend. And unless I see the share price moving back into an uptrend, I have very little interest in this company right now. I do enjoy doing these financial year 22 results video, and I don't know how long I'm going to continue doing these videos, this video series, but I do have the next 5 companies all lined up, and those 5 companies include Objective, Credit Corp Group, Australian Clinical Labs, Steadfast, which is the next company or next video I'm going to do, and a request, SRG Global. If you do have a request, preferably a company that is profitable, preferably a company that has revenue. I really don't want to do any of these financial year 22 result videos on companies that have no revenue, that are just stories at this point in time, because there's nothing really to talk about when you look at their financial statements. The companies you want to look at in terms of financial statements are those companies that have a real business, that are generating revenue, and preferably those companies that are growing their revenue over time. So if you do have a suggestion, just leave it in the comment section of this video and I'll see what I'm able to do. That's all I have for this video on Sims Metal Management, looking at their financial year 22 results. If you have any questions about this company or maybe any other company you'd like me to talk about, just leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.